Hey everybody, welcome back to Sniper Gains. On this channel, we're mainly focused on showing you how I trade the CRT. Now, pretty much, let me kind of give you an overview of what I'm dealing with. So this month, in terms of my P&L, I've made a profit of $2,735.62. Now, the first 2 weeks were pretty good. Now, when it came to the third and fourth week, I've been playing more of defense. So you start to notice I'm starting to use my 3 strikes on a few of these days, including this one and this one, when I typically use 2. What I'm hoping for is I'm hoping that in the next few days to catch some pretty good trades to close the month or the week strong. Now, yesterday I did take a hit. I took 2 trades. One was 6J, one was 6S, so that's the Swiss franc, and that's the yen. And in both of those trades, I lost 150 and 125. Luckily, in the early morning, I took a short on silver, and it came out to being around 240 bucks, which was good. So that means I'm down $59.72. So the way I'm going to play this is if I can possibly get the first trade to be a green above 200, I'm going to close it. So that way I can at least have one more winning day. So I can take at least $1,000 payout. Because ideally I want to get this balance to be above 5,000. I'll take $1,000 payout on this account. And then another 1,000 on this account once it gets to 5,000. So that is the goal. And right now let's take a look at the markets and see what setups are available. I'm taking a look right now on ES. So if you've seen my videos, you'll know I use the AMD model. This block right here from 4, or technically from 4. Is that 4 or 3? Hold up. Let me check this real quick. From 3 to 4 Eastern time, that's what I consider the accumulation hour. On this hour right here, from 4 to basically 6 that time, this is the manipulation hour. Now, in this hour in particular, it's very unique because it left a very important 5-minute fair value gap. So you see when we swept the bottom and it closed up top, it formed a bullish fair value gap. The hope and the goal is that this price action will go, tap, hold the gap. It could probably even go down a little bit and be in drawdown, but the hope is it'll hold enough to not take out this stop loss right here. So pretty much that is the play that I have. And if I put it on the hourly time frame, you will see that it's essentially forming a bullish CRT model. One of the reasons why I'm anticipating for it to tap and push is because we're above the 50 EMA, which represents to me a bullish directional bias. And over here, the SOAR dots, which are underneath, that represents to me bullish momentum. And this is done on the hourly time frame. So it's a possible play, but let's just say it doesn't work out. The only cost to it would be $127.80. So I'm willing to take that risk because if I can hit the target, because I always push to hit the target, that could be $1,000. So that would be pretty cool if it works out, by the way. However, I'm going to split my risk. So whenever I'm about 4,000, the maximum I can lose in a day at this profit level is going to be $400 because I usually do 10% based on my profit balance. So I can at least have 10 days worth of, a drawdown. So with that being said, let's dive in and let's see what we got. So I'm going to set my buy limit order right about here. So I'm going to go here. This is on the ES contract. So we'll go here. I need to go to the other side. And then we're going to put limit buy at 1. Oops, that was not according to the game plan right there. Okay, so there we are. And what I'm going to be doing right now is while we're waiting for it to tap, I'm going to be checking on the stream just to make sure that the audio quality is good. And yeah, let's hopefully have a profitable stream. Okay, give me 1 minute. Okay, so pretty much what we're waiting for is to wait for this price action to tap this fair value gap, fill the fair value gap, and hopefully hold it enough without having to take out this stop loss. So the idea behind this setup is if it were to hold and push up, this would lead the price towards taking out the buy stops on the 3 a.m. accumulation hour. So it's a very unique hour, and well, basically it's a very unique setup in my opinion. Hopefully my theory plays out in real time. However, we always risk low just in case that it doesn't work out. We're not burning our whole account by over leveraging. So ideally the way it works is I have 3 trades that I can use in a day. This keeps me from over trading, and this keeps me to be focused on catching high quality CRT setups that I can take advantage of. So it's a waiting game. Hopefully it will tap here, because if it goes above 50%, there's a good chance it might go all the way without us. So we'll see what happens. And in the meantime, while this is cooking, I'm going to check on the other ones just to see what's going on. I'm also going to set an alert to alert me about the price action before it fills, just in case I get kind of busy scanning other tickers. But right now, let's take a look at what's going on with the metals. So as I always say, gold is the king of the metals. Wherever gold is going, there's a good chance silver and copper will follow along. Now, when I'm taking a look at this, we're still in a very weird spot. We're below the 50 EMA, but we have bullish parabolic SAR dots. So it puts me in a weird spot whether I should go long or I should go short. So whenever I'm in a scenario like this, no trade. Same process here. With this one, it's about to get out, but I ideally want gold to make a final decision before I start to look at the other ones for trade-in opportunities. Now, taking a look at the other one just to check and see how we're doing. If I take a look at now CL, and I'm looking at the price action, CL also presents a pretty good setup. Now the problem, the one tiny problem with this setup is that this candle is literally touching the parabolic SAR. Now, when a candle gets very close to the parabolic SAR dot, it means it's going to most likely flip. And if it does flip, there's no trade. Now, it could actually respect it and go down, but now at that point, you're kind of pushing, I would be pushing my luck, and I'm really trying to give myself the best setup possible. So I'm going to have to do a pass on this, unfortunately. But with the other one, this one I feel way more comfortable taking, but we'll see what happens. Now, over here in the manipulation hour, it swept all the sell stops that were accumulated. Now, if this price action some way, somehow is able to reach here before tapping here, the play is over. But if it can tap here, then drive up and hits here, then would have hit an 8.3 R trade. Now, that's a huge amount for very little, but it's important because one of the key things that I use when it comes to my trading style is the win rate is not as awesome, but the average win to loss is pretty high. I try to keep it around 3 to 4 as much as possible. And catching a win like that would really kind of boost not only the average win, but also the profit factor as well. So I tend to favor a higher profit factor or a higher average win than a win rate. Because if I try to go for a perfect win rate, then it's going to be really tough to follow this edge if you're too concerned about having an amazing win rate like 60 to 70%. But if you're willing to work with a 40 and 50% win rate, then it's a lot easier to do this. Now, based on what I'm seeing with the price action, the price is pushing up. And this is definitely unique because now I'm in a sequence where I have to think, should I FOMO in or should I wait patiently? I would rather wait patiently because I could just go in here and try to go for a 1 to 2, and that's cool, but that isn't exactly why my full attention is on the trade. I feel like with price, it has a tendency to fill these gaps, especially the 5-minute gaps that form after a sweep prior to hitting the opposing liquidity target, which is this 3 a.m. buy side liquidity that's resting right over here. So this is a game of just waiting and seeing if it'll hopefully tap. If it taps it, then we might have a trade entry. If it doesn't, then we are pretty much have to wait for another setup altogether. So we'll just keep waiting, seeing, and yeah, that's it. I'm not gonna lie, this is very tempting right here. So the reason why this is very tempting is because, man, if it worked out, that would be a crazy RR trade also on this too. The only problem with this one is there's a high probability that it might not work out. But if it did work out, then you'd be hitting a pretty high trade. So for example, in this case, it would be closer to like a 6.4, which is possible, but it's highly unlikely because of how close we are with the SAR dots. Like literally, next hour should flip. If the next hour does not flip, that would be crazy because that would be a huge push to the bottom. But I'm pretty confident it's going to drop. It's going to flip to the opposite side. So I'm just more waiting, just trying to see what will happen on this one. But I can't really push for it just because it's more risky to take a trade right here and to try to short down, especially when the parabolic SAR dots are like touching that hourly candle right there. So in this case, this is more of a sit and wait kind of game, and I'll see what I can do. In the meantime, we'll occasionally be glancing just to see how it's doing in terms of price action. And then we're going to take a look at what's going on NQ. Because NQ has a similar price action. Even this one also has it too. Check it out. Okay, even this one has it too as well. If we take a look at it, it does still leave a fair value gap. That gap is present right here. It's very small, but it is present. Now, the $1 million question is, should we use the NQ version, which will yield us a 6.98, which is not bad, or should we go with the ES version? Now, there are a few pros and cons. If we go with the ES version, we might get that fill. If we go with the other one, we might get a fill, maybe. I don't really know. It all depends on how the price is going to play to it. So what I'm going to do in this situation is I'm going to open up another new window, but this time I would trade the MNQ because NQ, unfortunately, it would be 20 points, $20 per point, and that can be kind of expensive. And since I need to keep my risk low, I would favor moving on to the NQ contract. So we're going to try the NQ just in case, because the NQ still is going to give a pretty decent win rate. And I don't mind that. We're going to go to the 5-minute. I'm going to check and see. Now, on this one, it has that fair value gap, but it's so hard to see it. Like, it's so tiny. Like, here you probably cannot see that fair value gap. Like, it's like literally right there. No, it doesn't show the fair value gap on this one. So if I had to choose between this and the other one, it's better for me to just stick with ES. ES would probably be the best move. But what I'm going to do just to be alert is I'm going to go to NQ, right? Because I know that the fair value gap is present on NQ. But this time, what I am going to do is as soon as it even touches, I'm going to set an alert on here. Then from there, I could probably enter early, which I rarely do. But we'll see. We'll see what happens. Because I really do like the setup. The gap is there. It's small. It's tiny. It's really, really small, actually. But it is there. It is present. So to me, this looks more like a fair value gap that it could probably touch and rocket from. But we do not know. That's part of this setup, is we don't really know for sure 100% that it will tap and respect it. But in a case like this, what I would do, because if I try to do it on this one, it would be $200, and that's way above the risk because I need to try to split my 400 into thirds. So based on that, based on everything, ES still wins, but I will put a timer, an alert right above it. And then from there, I can kind of decide if I want to push ES just a little bit more. I think if I do it that way, it will give me at least a chance, because sometimes NQ tends to respond faster to what the market is doing than ES. ES will kind of lag a little bit from what I've seen in the past. So I'm just going to keep an eye on that. But in the meantime, we just wait and see what happens. Because I do want to keep that risk a little bit lower, because that would be ideal. And right now it's just a waiting game just to see if this will hold. We are on ES. ES is showing. I'm just trying to see how far I'm willing to push the trade. So the maximum I'm willing to go for is 6.75 risk to reward. Just in case if I feel like I really need to do that, I may have to opt to do that a little bit, but the ideal goal is for that 8.3. Let me actually write that down for 8.3R. But if I do the other one, 2.8 for fees plus 150 is equals the 152.80, 152.80, and that's for 6.8R. Let me confirm that. That's for 6.75R. Okay, let me go back. 6.75R. So that way I know my numbers. I know how much I'll be charged. This is based on just one micro contract. So now we just wait and see how we're going to pivot. I'm going to put this microphone on mute just to kind of check on a few things, but then I'll be right back. Okay, so right now, what I'm basically doing is I'm anticipating that the bearish candle, whenever it hits this fair value gap, it will push up. And the target, we're going to target the top of that buy side liquidity on the 3 p.m. Eastern hourly candle. So I have two options here. I can go for my 8.3R and push, or I can go for the 6.75R by making sure that my stop is above. I'm going to try to see based on what NQ is going to do. So as this thing is moving down, I'm going to be paying attention to NQ, because what I am betting on NQ, let me move this out so that way it's not distracting, is I have a stop set right above this very, very tiny fair value gap. Now I'm using the ES because the ES has a little bit of a bigger fair value gap for me to work with. So right now, I'm just gonna see what it does. If it does favor me, I will probably go for the 8.5R setup, but we'll see what happens. It all depends on how close this candle on NQ gets. If it gets pretty close to here, then I may opt to kind of enter in a little early on ES, but we'll see. So the hope is it will fill, even though if it goes into drawdown a little bit, that it won't surpass this swing low point on the manipulation hour. So that's the trade. And then with any of my trades, what I usually do is I'm going to always push to the top. So now we just have to sit, wait, and see if it'll hold. I'm going to also move this to the side over here. Okay, so price is doing its thing, and now we're just waiting. Hopefully it will fill this gap highlighted in this yellow box right here. So if I zoom in, so that way you can kind of see the yellow box I'm referring to, this was the 355 candle. It swept it, right? So it swept that candle. Now, when it swept it, it did form a bullish or a 5-minute bullish fair value gap. So the goal is the price is going to go fill this gap. It might even go into drawdown, but hopefully the drawdown does not take out that swing low. during this hour, which is like from 4 to 6. So we'll see what happens next, and we'll just keep our eye on the prize. Let's see if this thing will hold. Okay, so the price is slowly approaching that fair value gap right over here with the yellow box. So we'll just take a look and see what happens. Okay, so the price is going down. Okay, let's see what it does. Let's see what it does. Okay, so price right now is slowly creeping towards the 5-minute fair value gap. So what we're going to have to do is, as soon as this hits, we set our stop loss right here. And the reason why I've put it right here is This has already formed the first part of a bullish fair value gap. It includes the base candle, which I like to call the accumulation hour, and the manipulation hour already closed above this box. So if we look at it on the 1 hour time frame, to switch to the 1 hour time frame, you'll clearly see it. This is candle 1. This is candle 2 that is swept and closed inside of the candle 1 range, which we like to call the accumulation hour. Now, what we're anticipating is the fair value gap left will be the final piece that they have to tap to push price up. Now, there's a good chance that it can go tap it and just blow past it. If that happens, the play is over. So we have to keep our risk low. Now, if you take a look at the chart here, $2.80 represents the fees for one mini contract, and 125 would be the risk. So if I do 125 plus 280, I'll be risking $127.80. But if I were to push it up a little bit higher, I'd be risking $152.80. I'm going to try to hold it as much as I can to the tippity bottom of this move to see if it will hold. If it doesn't, then we just have to shake it off and move on to the next trade. But based on everything I'm seeing, it is an A+ setup according to my strategy. The question is, will the market respect that fair value gap? So we'll see in just a few minutes. Now this one definitely will be the trade that will test my resolve, I'm pretty sure, because the RR is 8.3R. Now you might be saying, okay, what's the problem? Just go for a 1 to 2 and you're good. Yeah, though that is true. That is true. It's just when it comes to my edge in particular, I literally, no joke, I actually have to set the stop loss and hit the target. The reason why I do that is it makes a big difference in the P&L whenever I stick to hitting the target. Now, this is obviously a large target. I think the highest target I've pushed so far would have been like probably a 5.6 R. So this would definitely be pushing it to that next level. But no matter what, this is like a very important rule for me. As soon as this initiates, set a stop loss here. Your take profit is all the way there. So some way, somehow, I'm hoping there's enough good news that would some way push price 20 points or 20.75 points up from here. Now, obviously, we have to keep the risk down. So for the risk of 127.80, it's not a problem because, again, we have the cushion to handle that trade. And the key thing is to keep focused on the mission and to just stick to the trading strategy and just to trust the process. So this will definitely be a very interesting trade, and I want to see what I can learn from this. Okay, it's about game time. The price is definitely bearish on here, so the price is starting to move down towards that fair value gap. So as it's moving down, we need to get ready. We got to get ready. So as soon as it hits, we set our stop loss, we set our take profit zone, and we let go of trying to control the trade, trying to, trail risk and do all of that, because that is a huge part of the system. Is when you set that entry, you do not touch it until it hits the opposing side, which is all the way here. So to make it a lot easier for me to follow through, I've reduced my risk to 127.80. So that way it's a lot easier. So even if it just goes and just blows past it, it would suck, but we can recover from that. It's just the key thing is it's important for me to, if I see an opportunity, especially a high risk to reward opportunity, to take it, because As you can see, I've been kind of like getting like little base hits here, here, but we do need a little bit of a pump, and hopefully this might work out for us. However, just in case, we always have to practice good risk management because we don't want to, blow through our risk for the day. So that's the goal. That's what I'm basically focused on right here, and we'll see what happens. Okay. And while we're waiting for the trade, it is pushing towards 6924. And again, if you are, for some odd reason, trying to copy my trades, please do not do that because you can literally lose a lot of money. So this is just basically educational purpose only. Anything that I'm saying here is not financial advice. This is just me streaming my progression as a trader. So just keep in mind, do not be copying people's trades. Just do it on your own, or just learn and not just copy. Because if you start copying, it's not good, man. You got to learn the process. So every person has their own strategy. This is just my strategy that I'm using. And I know in the long run, it's profitable. In the short term, sometimes I'm going to have to learn how to control my emotions. Now, one key thing that I'm doing, no matter what, is I always take the maximum trades that I can take is 3 trades. So it's like a policy of 3 strikes, you're out. Even if you make a mistake between like a certain entry, it's only 3 strikes. Because the reason why I have to be very strict is I copy trade. You see that? So once I get this to a certain amount, at least maybe 5,000 in payouts, I'm going to need to buy 2 more combines. So that way we get them to go through, we get them funded. So that way I have 4 accounts. That would be where I want to be. I know that you can get max funded at 5 accounts, but I think with 4 accounts, I'll be good. And hopefully with good trading and good risk management, I can probably get invited to Topstep, to get a Topstep live account, which would be awesome. Because if you get a Topstep live account, if you trade for 30 days, you can literally get daily payouts, which would be perfect. Because that would kind of solve the issue I've had, because I've always wanted to work with Take Profit Trader, but they use intraday, and my strategy requires end of day. I cannot be trading intraday accounts because my strategy it will hurt its overall high risk to reward. So that's where Topstep comes in. Now, the thing about it is I obviously want daily payouts, right? If you have daily payouts, it's even better, right? In my case, anything above the 4,000 is what I would be taking out. Obviously, I have to respect the 50% rule, but I think when you're on live and you have 30 days, it's uncapped. So you could literally take out everything. So that is huge because it allows me to know that I can keep taking out cash and keeping a buffer of what would be if the 4 accounts were taken up with Topstep live. I'll try to do my best to make sure that there's 4,000 in each of them. So that way I'll be having a working capital of 16,000 in total. That will be ideal because at that time, one good trade, if I'm averaging about 2 to 3 R on a trade, you could be making on average maybe 1,500 every 2 days. And that's very conservative, like very conservative for sure. And that's really life changing because I've been trying to find a way to to really master the discipline of good trading and good risk management. And I know that if I stick with this strat or this strategy, that in the long run, it works. In the short term, it works. Like, I mean, it's not bad though, because obviously I've been doing this for quite some time. I've had a lot of trades. I'll show you the stats later. I just want to make sure I don't miss this entry. But to put it simply, I'm averaging about 50% win rate on the bullish side of CRT, and at the moment averaging about a 42% win rate on the bearish side. But on the bullish side, I'm averaging about like a 3R, which is good. That keeps me profitable long term, 3.35R. A profit factor, and the other one's 1.58. So still working on the bearish side. It still essentially has the same similar rules, but I've noticed on the bearish side that it has not exactly been as easy compared to going long. So that's something I'm gonna have to work on, because I like to trade metals, and the way gold is going, gold is most likely gonna keep dumping. That's just my opinion. So I need to adjust and adapt to getting better at the bearish version of the CRT. But for this one in particular, it's just going to be a bullish version of it. We'll see what happens, and we'll take it on from there. All right, so we've officially entered a new hour. So we have to keep that in mind. We've entered a new hour. Okay, so it's coming in aggressively, and that makes sense because we just opened up that new hour. So with this new hour, we're essentially hitting the 7 o'clock hour. Now, ideally, this red candle, I need it to tap here. So let's see what it does. Come on, buddy. Come on, buddy. So there's going to be a lot of bearish pressure coming in. All right, let's see if we get filled in. Let's see. Come on, come on, come on. Come on, buddy. Come on, buddy. Fill it. Let's see if it'll fill, and we'll have to check and see the result. Come on, come on, come on, come on, come on, come on. Come on, man. I need you to fill the gap, fill the gap, fill the gap. Come on. Come on, buddy. Fill that gap, fill the gap. Come on. Come on. All right, I'm going to have to go for the other one, because I know we really are pushing it. Come on. Come on. Come on, man. Come on. Ah, damn it. Okay. I'll meet it halfway. Come on. Come on. Damn it. All right. All right, we're just going to go for the 6.75 R. I'm hoping it does one more tap. So in this case, it did form that fair value gap, but I'm entering on a gap and retest at this moment in time. I just don't want to miss it. And I've done my calculations. So it would be a little bit over at 152.8. But it would be, it's what I would consider a decent trade. well, let me actually pause that. It fits my risk. It fits my risk for this trade because we don't really know the outcome yet. But it does follow all the rules that I'm looking for. Ideally, I would want it to be here because then I will be following my rules 100%. It's just I'm kind of concerned that if it just goes without me, that would kind of suck. I'm kind of wondering what to do here. So I'm thinking maybe I can go halfway. Like maybe halfway, so that way it's half the risk. So that way it's not too much, but it's not all the way yet. So I think I might do that for now because we are trying to catch this trade, but we'll see what happens. Come on, buddy. Don't do this. Come on. Come on. I'm just going to place my limit there. Even though it's 150, it is going to be a little bit higher than what I had originally. Well, I did pre-plan for it. I did pre-plan for it at least. But based on the circumstances, I think I'm just going to take a risk, add a little bit extra, $25 extra to it. But I think in the long run, hopefully it'll work out, but we'll see what happens. So we'll just have to wait for it. Now, this is where is my max amount I'm willing to risk on the trade. So if it fills or if it initiates, it has to initiate here. I cannot push it past here because then I'll be over risking. Because ideally, I need to split my risk in thirds. So I would ideally have wanted to risk $133 instead of $150. But I'm just kind of concerned that it might just bounce and go. So I'm wanted to be just right there. Come on, man. Don't do this. Come on. Come on, man. Just one tick. One tick is all I need, man. Come on. All right, so we're still at that fair value gap. All I needed to do is just to do one small bottom tick. That's it. So if we can bottom tick just a little bit, just go in, and then that will be perfect because then at least I can be able to enter the trade. I'm trying to see how we can be able to navigate this. So right now, we have to wait, be patient. I'm going to be patient and wait it out just because it's important. It's an important trade. So let me just be patient, wait it out. Let's see what happens. Come on, buddy. Come on, buddy. So at this moment in time, we'll just have to wait. So this technically would be considered a gap and retest for me. Usually I like gap and fill, but the reason why I'm being a little bit more cautious about this is because it's a 6.75 R. So if we were to play our cards right, and if it were to go in our favor, $150 plus times 6.75, that's about $1,000. You know, that's about $1,000. You know, after the play has been completed. That's if it holds. So that's why you see me being more focused on just waiting to see if it will just tap. Just to tap this gap right here. It might obviously feel it. It might go into drawdown, but just to at least position myself to be there for that trade is important to me. And we should just be patient and wait it out. So I'm going to just wait it out and see, because it's like right there. I just needed to tap and go up, preferably not go down. So we'll see what happens, man. We'll see what happens. Okay, let's see if it will tap it one more time. So you'll see it basically tapped the fair value gap, but all I needed for the price to do is just to break into it just a little bit to activate my buy order. Now, typically I would have entered my order right here. Let me show you. I would have entered my order right here, right? But the price difference between of 25 bucks versus 125 and 150 is kind of minuscule compared to what it could be. Now, it could be a loss, right? Whatever I set the fair value gap, I don't really know if it will hold or not. That is the unknown part of this strategy. Like, I can find the fair value gap, but I don't know for sure if it will hold or not. Now, based on other confluences, such as it being on the 50 EMA, it being having the SAR dots underneath it, the manipulation hour closing inside of the accumulation hour, these are just confluences that I'm using to stack the odds in my favor that when I spot the gap, that the gap holds. Now, the gap does not hold all of the time, but it does hold it for a good chunk of it. So this is what I wanted to show you. So I've been doing the CRT for quite some time. I've taken over 36 trades with a 50% win rate with a profit factor of 3.35. So this number that you're seeing, it's essentially those two combines combined together. This is what I've been doing pretty much every day. Right now, we're kind of in this plateau. I'm hoping to kind of break out to keep the momentum going. But this is the trading that I've been doing for a good chunk of the time. So even though it wins about 50% of the time, it does yield an average profit factor of 3.35. So that's why you kind of see me taking larger than usual trades, because I want to make sure that I'm skewing this profit factor as much as possible. So when it comes to the bearish side, it's been kind of a wild ride. I'm trying to figure out how to control these ups and downs, but that's just going to take a little bit of time until I can figure it out. But hopefully I will be able to figure it out. But the daily win rate has not been bad. It's been 55.56, so that's not bad. So we are just going to wait to see what happens. Give me just a minute. I will be right back. All right. I just realized that CL hasn't closed yet, but well, I just realized, okay, let me kind of rewind myself here. I just realized that when this candle went up, this candle right here did not flip the opposite side. So there's a chance it could hold, but it's kind of slim. And right now I'm more focused on this one because this would be considered more of my A+ setup. So I'm kind of conflicted to see what should I do. Should I go for my A+ setup, or should I go for this trade right here that could still yield a very good profit factor too? So let's say, for example, I went for this one. It'll only be 50 bucks. And then you can add 2. And bam, you do have 640, which is not bad. It's not bad at all, actually. So I'm just kind of curious to see what you guys think. Because in my opinion, I feel like it's just going to take it out and just not go all the way in. This is actually kind of tough because I'm looking at 2 setups now. But I feel like I should trust my original intuition and wait for this trade. Oh, this is tough, man. This is really tough because I'm like, I see it, but I want to make sure I have the discipline here. So I think with this one, I'm just going to do it on the, I'm just going to have to see what happens on this one. I'm going to just observe. I'm going to observe and see because right now my heart is set on trying to take this ES trade and it really looks promising. But I also see the CL trade as well. Now, I know CL can be a little bit tricky when it comes to going short. And ideally, you want to make sure your shorts are pretty good. As in, like, good setup, good everything. This is actually very unique because I don't want to FOMO, but I also see that this could be a good opportunity as well. The setup looks good, but I'm looking for the flip. Let me see. Hold up. Aha! Thank you. Thank you so much. So this is good. Now I've seen that it was flipped. Now I know that this is a dunzo. This is a bad setup. Bad setup. So by patiently waiting, I was able to see the Sir Dot flip on the opposite side. So this is most likely going to ramp through. And if that's the case, there's no trade over here. Now I can kind of focus on this one. So let's check it out. Let's see if it will fill the gap. We're going to wait for it. We're going to wait to see if it will fill the gap. Okay, so right now we're just waiting to see if the price is going to go fill this gap before going all the way up top. I'll take a look and see what we need to do. So what I'm doing right now is I'm just kind of seeing how this would look like if we went long, because I've started to notice that whenever I have a setup very similar to this, you see I has already taken out that high right there. It tends to push price up even further. So I'm just trying to see if this can work, because I'm trying to figure this thing out. I'm trying to see how we can make it work. Okay, so here we've placed it. We're gonna go to here. This is just me kind of like waiting to see what happens with this one, because this is going to take a little bit of time. I'm just kind of testing one quick thing here just to see if it will push up. Let's see. Okay, so I'm back, and basically what we're doing is we're waiting to see if this price action will fill the gap first before pushing all the way up, hopefully. So we'll see what happens next. Okay, so price is coming down. Now the hope is that it will hold this zone right here. I want to take a look at ES just to see what's going on. Want to make sure that none of the candles have flipped. So we're still going to keep waiting to see what happens next. All right, price is pushing down more aggressively. So as soon as it taps, we'll be in and we'll be ready to go. Okay, so we're just waiting for it to keep doing its thing. So now we just have to keep waiting. Sorry about that. I had to attend to a few things. So I'm going to have to cut this. Unfortunately, I'm going to have to cut this stream short just because I have to attend to a few things right now. But if I don't catch this trade, I will try to set it up for the London session. So sorry about that, guys. Have to attend to a few things. I'll see you in London if I don't take this trade. So we'll see what happens. Okay. Peace out. I'll see you next.